Hello, today is January 19th, 2019. My last call said we had some targets, but if we gapped over this high, they were killed before the open, and that's what happened. This is the pattern, I believe, with the early high, and next Tuesday when the market reopens, we'll have the pattern with the early low. Doesn't mean you won't gap up first. Early on, we had the signal that ultimately lower prices would print. That's the minimum. Usually we get more. There's no time limit on this. Usually you don't have to wait long, but usually and always aren't the same thing. MEJT said this drop was false, would retrace, which it did. In a less bullish environment, this would be a pretty easy call. You gapped up, hit a new high, couldn't hold on to the highs at the close. Unless you gap up, take this out early, it's a negative pattern. It's also negative that with a minute left to trade, we were way down here. And then with a minute left to trade, you had a wall into the close that continued into the after hours market. The assumption here is that usually these trending moves, especially on Fridays, will continue. Retail customers aren't going to be selling like this. Big money is the only one who's going to want to get out when the market's going up like this. And certainly big money isn't going to be buying at any price. Just a minute left to trade when there's no liquidity. So the assumption is that retail customers are going long or closing out shorts, that the specialists have to sell stock to them. And if that's right, the specialists tend to get their money back and a lot more very quickly. So if that's right, we'll gap down at Monday's open, at least under this low, and more likely than not lower than that. Now we've been going straight up and breaking through a lot of resistance level that looked pretty plausible. I have targets as high as 2,800 that make sense. It's not the only target that makes sense. Here, if you connect these lows, you get this high. And you see it's a Fibonacci target of the prior consolidation. And if this is the end of either blue B, which I doubt, or A of B, which is more plausible, if that's what it is, then here's your count, A, B, C, with a nice fib relationship. So it's tough to pick tops when the market's going up as relentlessly as it has. But this is a candidate for a top. If the analysis is right, we should gap down Monday morning. And if it's wrong, we should gap up over these highs. As far as whether this is the end of this leg or just a one-day drop with further highs on this leg, I think it's too early to be certain, at least for me. It's a candidate for the end of this leg because of the fib ratios on the count. It's a reasonable candidate, but as I say, it's not the only candidate, and I need more information than I have to be confident of that. So we'll say Tuesday's open's critical. Normally, you would gap under this low and probably lower. But if we take out these highs early, the whole analysis falls apart. And that's today's call.